Hey guys, it's Kevin and welcome to the channel. We have a huge week ahead of us for Magnificent Seven. 4 of those companies will be dropping their earnings this week, but one of those companies' earnings matter more than the others. One of those companies' earnings have the ability to potentially swing the tech sector and affect AI demand. That company is Microsoft. Microsoft is no longer just another big tech name. They're actually in today's market, one of the purest AI enterprise players we have. So if you're an investor in Mag 7, or if you like to follow the news of these tech titans, or just like to follow the news of anything related to AI, this is a video that you're going to want to watch all the way through. In this video, we're going to cover why Microsoft's report matters more than the others, what to listen for and look for on Wednesday's earnings, and then the impact that it could have on the stock and the sector. But before we get started, if you haven't already, please give a like to this video, subscribe to the channel. We're trying to build a community, and I'm committed to bringing one video every day directly to you that shares some of the top insights and trends happening in the market to hopefully make you a more informed and better investor. So let's get started. On the screen that you see is the key earning dates for the Magnificent Seven. And as I mentioned, 4 of them, Microsoft, Tesla, Meta, and Apple, will be dropping their earnings this week. And that'll be pretty quickly followed by Google and Amazon the following week and Nvidia later in the month. Now, why are these Magnificent Seven companies so important to AI? It's because for years they've been pouring billions and billions of dollars into AI infrastructure, into AI research and development. And Microsoft on its own is estimated to spend $80 billion annually on capital expenditures related to AI data centers and infrastructure. It's a staggering amount. And in today's market, investors are starting to move beyond the AI promise and move into a position of AI profits. We want to see a clearer path that all of this spending is going to relate to return on investment. And Microsoft is one company that is uniquely positioned across the entire AI value chain. So their earnings this week may be able to help answer some of these critical questions that the tech sector is facing. And when I mentioned that Microsoft is uniquely positioned, if you kind of look on your screen here, you can see they have a product or service across every single layer within the AI stack, whether that's foundation models, infrastructure, services, or applications. Today's video, we're going to focus on 3 areas that I'm going to listen to closely on Wednesday, and it's going to be Azure, Copilot, and OpenAI. So let's start first with Azure. We know that Microsoft's intelligence cloud service is driven by Azure, and it's actually the backbone of the entire company's valuation right now. But it's not just Microsoft's cloud service. Azure is actually one of the leading global platforms where other companies use their AI models, they train their algorithms, and where they deploy their AI-powered services. Azure right now is the second leading global platform company, provider. You can see on your screen the top 3 between AWS, Azure, and Google Cloud make up about 3/4 of the market. This is an area we're going to look for in the reports: is Azure able to eat into the AWS market share, or are they losing pace to Google Cloud? So we'll have to listen for any competitive updates on any competitive competition in this space. Microsoft Azure is an area that analysts have been watching closely for the past few years. We know they're projecting Azure to have anywhere between a 33 to a 37% growth in this quarter. Honestly, for me, anything over 35 is a strong bull sign for the stock. But it is a deceleration from what we've seen in prior years, particularly last year where we had peaks of 40%. And if this starts to slow, it could be a signal that the rabid demand for AI cloud computing is starting to cool. But it also could be a sign that Microsoft is experiencing capacity constraints and it's not able to meet the demand for AI. If it's the latter, it'll be more detrimental for Microsoft, because we know last year we had a strong pullback in the stock in the 4th quarter. For one of the reasons was because of temporary capacity constraints they had related to their cloud services. So it's something we want to keep our eye on in the report, because fundamentally Azure tells us everything we want to know about enterprise spending on AI. Are businesses still aggressively shifting into the cloud to leverage AI? Are businesses still developing AI applications at a rapid pace? Azure is the revenue related to Azure and Azure's performance is the key gauge to help us answer those two questions. But let's move beyond infrastructure now, and let's take a look at Copilot. Microsoft is actually leading the charge for integrating AI directly into enterprise software with products like Copilot into Microsoft 360. This is where we see the shift of AI moving from data centers actually to the user's desk. And if Copilot numbers are strong, it'll tell us a few things. One is they found ways to monetize AI, because this is something also that had an impact on the stock last year. So they're finding ways to monetize it. But it also proves that businesses are not only willing to spend on AI infrastructure, but they're willing to spend a premium price on AI productivity tools. And this will be a great sign, a strong sign for the whole AI software sector. And it'll be a signal to companies like Salesforce and Adobe that the market for intelligent applications is real and it's growing. Let's shift to OpenAI, the OpenAI factor for Microsoft. Microsoft is the largest single investor in OpenAI, which is the company that makes ChatGPT. And we know that it provides Microsoft with a strong competitive advantage, but it comes with a cost. Just last quarter, the losses associated with OpenAI significantly reduced Microsoft's net income by over $3 billion. So this report gives us a fresh perspective on the financial implications in this critical partnership. Is Microsoft willing, are they able to manage these losses? Are the losses growing, or are they narrowing because OpenAI is finding revenue streams within the Microsoft Azure platform? Overall, guys, this is something that we'll keep our eye on, because the answers here will help influence the market's views on the viability of these similar large-scale AI research and development investments across the industry. Finally, I just want to focus a bit on the performance of Mag 7 and the impact that this group has on the entire market and sector. So we know we paid a premium for Mag 7 stocks in the past because they've outperformed the S&P. On the screen here, you just see the growth of the Mag 7 cap over the years from 2016 to 26. All of them have been significantly growing and having greater scope and influence in our markets. And Microsoft is up to 3.4 trillion. But the other area that is the reason why we have to keep our eye on these stocks, because their performance is so related and drives the performance of the entire market. If you look at Magnificent's contribution to the S&P 500, if you look in 2015, they were made up about 12% of the S&P 500 to where we are today in that bottom row. Mag 7 represents almost 33% of the S&P 500, and some believe that they could get to 40% overall by at some point next year. And like I said, we paid a premium for these stocks. And for years, Microsoft has always been seen as the safest play in the Mag 7 because of their diversified revenue streams and the robust cloud business that they have. But recently, they've had some cracks. I'm going to show you on your screen today just the performance of Microsoft over the past year. We know when we look at their performance, they had a return of about 5.7%, 5.7% on the year. And that pales in comparison to S&P's 500's return of 13.3%. But if you look across the board, we do see that at moments we had a strong run through parts of 2015 up to about July, where we hit a high of 550. And again, we had a match of 550 again in October. But then we had that runoff or that pullback in the fourth quarter that you see on your screen here that I'm highlighting. And that was mostly due to a number of factors. One is that there were concerns about their ability to monetize AI. There was concerns about their significant capital expenditures. In fact, I think they hit 30 billion in one quarter. And it was also related to that temporary capacity constraint that affected the cloud business. And that pulled back the stock down to where we ended last week at 465. But when I pulled down the screen here and I look at one of the indicators that I pulled up, which is RSI, We know that anything over 70 in RSI is a sign that the stock could have a sell-off, and anything below 30 is a sign that the stock has sold faster than expected, and it could rebound, or there could be a stronger purchasing power for it. So throughout the year, you could see Microsoft, like second half of last year, was right around this neutral status. But we've started, as we get into the year, started to dip in RSI here, and we've gotten down to about the 30 mark. And so this could be a strong sign that this stock is ready to rebound. If we couple that with a strong earnings next week, we very well may see Microsoft start to move upward and reach areas of that they achieved last year in July and October, and maybe even start to get closer to the consensus price target for this stock, which is about 600 a share. So it's something for us to keep our eye on. But we do know that in general, the market is very sensitive nowadays, and that if Microsoft misses their earnings, even if they have a if they're slightly off from their forward guidance or Microsoft Azure, that could cause a significant pullback in the stock, and it could cause a significant pullback in the sector. However, conversely, if Microsoft has a strong print on Wednesday, and if that strong print is related to anything from an AI metrics, this will reignite enthusiasm, and it can confirm to the market that the AI bull market still has some room to run. So just remember, folks, on Wednesday, when we're reviewing Microsoft's earnings at the close of the market, we have to remember that Microsoft's report is more than just Microsoft itself. In today's market, that it is the clearest indicator that we'll have next week for the health, direction, and overall value of the AI revolution. Are we moving from an AI promise to an AI profit? Microsoft's report on Wednesday may give us the clearest answer yet. So guys, let me know what you think. Do you agree? Do you think Microsoft will have a strong report on Wednesday? Drop your comments below. I'd love to hear your perspective on the video and Microsoft overall. And make sure that you like and subscribe and turn your notifications on so you don't miss my future videos related to the earnings calls next week. But I hope you have a great day, and I'll catch you on the next one. Take care.